Hello and welcome back to Digital Assets Daily. Good morning, good afternoon, or good evening, wherever you are in your corner of the world. Hyperledger powered supply chain solutions in action. And I'm a big fan of Hyperledger with its connections back to IBM, Linux, Red Hat, and Stellar, as Stellar being a associate member of the Hyperledger as well. As 2020 has shown, supply chains are both vital and vulnerable, underscoring need for trust and transparency. To meet that need, blockchain is playing an increasingly prominent role in many supply chains, and Hyperledger technologies underpin most of the biggest and best-known networks, including Food Trust and TradeLens. And if you follow this channel, you've heard us discuss those many times since last year. But there are many other examples of Hyperledger technologies in action in the supply chain space, and there's more details into Accenture's True Supplier Marketplace, the DL Freight, Telefónica's E2E supply chains, and Trust Your Supplier. For me, this is very exciting, basically because that is in my opinion, the equivalent to like what VeChain is doing. On the next article, China should take part in creating global regulatory framework for digital currency, Xi says, or Xi. Chinese President Jinping Xi says China should proactively participate in creating the international regulatory framework on digital currency. He states we need to take advantage of the momentum and accelerate the digitalization of various fields, including our economy, society, and government, as well as proactively participate in creating the international regulatory framework on digital currency and the digital tax. She said in his statement on Saturday, titled Issues on National, Medium, and Long-Term Social and Economic Strategies. In the next article, the U.S. banks could seek to partner with or buy crypto custodians, OCC's Brooks says. And what did we have recently was I'm stating that banks could hold your digital assets and cryptocurrencies. Now we have that they can basically acquire them or partner with them. U.S. banks are looking at ways to handle crypto adoption in the wake of the Office of the Comptroller of the Currencies, the OCC. The July decision to allow banks to provide custody for cryptocurrencies, acting comptroller Brian Brooks said in a podcast that may mean partnering with or purchasing the custodians. And in the next article, Brazil plans IPO of state-owned digital bank. So it's estimated that about 40 million Brazilians could become permanent account holders of the Caixa, the digital arm of state-owned bank Caixa Econômica Federal is CEF, and it's created to pay the emergency aid for financially vulnerable citizens during the issue at hand. The government's fintech will now enhance with the PIX, Brazil's upcoming instant payments system, and get additional offerings as microcredit and insurance. On the next article, we have this Swiss authority approves Russian bank's application to introduce a crypto money deposit service. The Swiss-based subsidiary of the Russian bank is ready to offer the custody of crypto money. This development means the Swiss government is interested in the cryptocurrency sector. Custody of crypto money will allow citizens to buy or sell their digital assets through Gazprom Bank, and the Russian government seems to disapprove of the introduction of a crypto money custody service in Switzerland. As a result, some of the private players in the banking sector are dependent on their subsidiaries for the introduction abroad. On October 29th, one of the private banks in Russia announced that the Swiss Financial Supervisory Authority had granted them permission to introduce crypto services. On the next and final article of this video, we have the global issue at hand has accelerated several troubling trends already in force. Among them are exponential debt growth, rising dependency on government, and scaled up central bank interventions into markets and the economy. And this article is titled, A New World Monetary Order is Coming. In the article, there is a video. Feel free to click on the link and watch that if you're interested more on that information as well. So fast forward to 2020, and the Fed has assumed for itself novel policy mandates that are a precursor to a new monetary system. But the monetary masters aren't contemplating a return to sound money. Rather, they're planning for even more debt, more inflation, and picking of winners and losers in the economy. The Fed has unceremoniously thrown its statutory dual mandate of full employment and stable prices out the window, and now gives itself an unlimited mandate to inject stimulus and bail out cash wherever it sees fit, including recently junk bond exchange traded funds. Instead of pursuing stable prices, the Fed is now explicitly embarking on an inflation-raising campaign with the goal of generating annual price level increases above 2% for an undefined period. The next frontier of the Fed's unlimited mandate could be FedCoin, a CBDC or central bank digital currency. Earlier this month, Chairman Powell participated in an IMF panel on international payments and digital currencies, and he touted electronic payments systems and raised the possibility of integrating them into central bank digital currency regime. So Powell so far has declined to outright endorse a move forward to a fully cashless system, which countries including China and Sweden are spearheading. But he is on board with the larger globalist agenda of expanding the role of monetary policy in shaping economic and social outcomes. The IMF Managing Director, Kristalina Georgieva, sees expanded monetary tools being aimed at every issue under the sun. We will have a chance to address some persistent problems: low productivity, slow growth, high inequities, a looming climate crisis, and we can do better than build back the pre-issue at hand world. We can build forward to a world that is more resilient, sustainable, and inclusive. So the IMF is being pressured by debt campaigners to sell some of its gold reserves to cover payments owed by some of the world's poorest countries. The IMF would issue pseudo-currency units known as special drawing rights, SDRs, to cancel the debts of poor countries. SDR, back since 1969, has also been backed by gold, 2.88 grams. And Payson has Pays SDR built on Stellar that is an equivalent match and already ready to be used. So it'll be interesting to see what happens and where this goes, and I'm sure it's going to speed up very significantly by the new year. I'm going to leave you with a final thought. Don't trade your authenticity for approval. And again, this is not financial advice. It is for entertainment purposes only. Much love. We will catch you in the next one.